Hello, you're watching Economic Lifelines Nigeria. I'm Wole Famrewa. Thank you for joining us. Now, last May, the Asset Management Corporation of Nigeria announced a debt refinancing plan. The plan would see AMCON sell its stake in banks, airlines, and other assets worth billions of dollars. And in today's show, we take a look at AMCON's asset disposal strategy and its implications for Nigeria's financial markets. Buying up trillions of naira in bad loans and injecting fresh capital into ailing banks was just the first step in the Asset Management Corporation of Nigeria's efforts to restore stability to Nigeria's financial sector. This phase was completed in December 2011, but a tougher task lies ahead, recovering bad loans and selling off assets forfeited by AMCON's debtors.
AMCON is a custodian of toxic assets. Basically, they purchase toxic assets from banks at very steep discounts, hold them. In some cases, those assets turn around and become lucrative again and they sell into the market. But AMCON is a responsible institution, not just for distress resolution, but in any case for macroeconomic stability.
What we had that AMCON did was to buy the entire NPLs, about 95% LPLs of the banking industry. And if you take a look at the loans that they actually acquired then, about 60% of them were actually exposures to these three sectors. For instance, a little above 20%, around 20-23% of the loans they acquired were into the oil and gas industry. Another 20% again is to the capital market related loans, which of course were largely margin facilities that were given by the banks, which apparently because of the downturn that we had in the equities market, again, those loans went bad. Again, we had almost about 20%, or you say 150 if you like, exposure to the general commerce.
I think the loans without collateral are going to be difficult because there's no, you use collateral as a lever to try and get the debtors to pay. If you have no collateral, then you just try and there's no real lever you have apart from through the courts. So I think those loans are going to be very difficult to arrange. And you understand, all the loans they got were bad debts. So debts that the companies were unwilling or unable to pay. So you're already in a difficult position at first. And for those that are unable to pay, you can restructure, and hopefully the company can then start from a lower coupon basis, pay over time. But those who are unwilling, then you have an issue of how can you force someone who's unwilling to pay.
AMCON currently holds two types of assets: trillions of naira in bad loans and assets acquired through deals done with debtors.
AMCON holds a lot of real estate, a lot of all the assets that collateralize loans, be it shares, be it financial instruments, be it tank farms, be it equipment, machinery. So they have a value. Somebody must have ascribed a value to it to lend against it, or even to purchase it. You know, the loans were, the purpose of the loan was to buy an asset. On top of that, the assets were also collateralized with other assets. So AMCON has a wide range of assets. They have thousands and thousands of relationships, and relationships that were, you know, collateral arrangements that were packaged, some guarantees, some cash, some financial instruments. And so what happens is that they take stock of it, they value this asset from time to time and make a decision as to what next and when to unload them into the market.
We have non-performing loans, which constitute about 90% of our holdings. And then we have assets which are proprietary assets inherited from loan for features or settlement. We own all kinds of assets. I mean, our prop portfolio, net of the banks, which we own, are just under $500 billion. And they comprise securities, both listed and private, real estate, and businesses. Primarily those three asset classes.
We started with loans, and our objective always has been to get our money back that we paid for the loans. But in doing that, each one is different. And so sometimes we have to convert some debt to equity. Sometimes we reach agreements where we actually take assets over. And so each one is different. But we ended up publicly, we have some shares in some industries now, airline industries, some manufacturing companies, some downstream oil and gas industries. We've ended up either with assets or being a significant owner of the companies at this point.
The rescue of Nigeria's ailing banking sector cost just under 6 trillion naira. That's the face value of AMCON bonds guaranteed by Nigeria's government. Given the cost of the bailout, not everyone has considered AMCON a good idea, and almost 2 years on, the handling of AMCON's assets remains a touchy subject.
There's a lack of trust by the public in a whole in a lot of government institutions. A lot of it's historic, and it behoves institutions like AMCON that have been given a lot of public money. There's a lot of public debt which the government of Nigeria is going to have to hold if it goes wrong, that they're managing. And then because of that, they have to be transparent.
I think everywhere in the world, resolution vehicles are typically like elephants in the room, or you say gorillas in the room. And why is that? The fact that they're always very sensitive to some political issues, given the fact that, remember very well, Federal Minister of Finance and CBN are actually the major shareholders of AMCON. They both have 50% equity, and to some extent, given the fact that the act establishing AMCON was actually the act that was passed into law by the Senate. So to some extent, you still have some political influences.
However, AMCON's management says that the organization operates with a governance structure designed to promote transparency and prevent foul play.
We live in Nigeria. We know what the reputation of public institutions has been in the past. So we're very aware of that. AMCON is first of all, we're a regulated entity. So every year, CBN comes in and does an examination of AMCON's operations in total. And that's what we call a routine examination. CBN also does examinations from time to time that are special examinations. They look at specific transactions and they ask questions about specific transactions. The National Assembly also has a very keen interest in what we do. We have 2 oversight committees, one in the Senate, one in the House. Both of them are chaired by very competent and very thorough chairmen. Additionally, we have a very, very strong board of directors. And we keep saying it's made up of a deputy governor of Central Bank, an MD of NDIC, both of whom have very keen interest in making sure that the banking system, financial system is stable. We have the Director General of SEC, and we have the PEMSEC Finance. So these are people who are very serious professionals, who have spent a lot of years in their professions, and who have a very, very keen interest in making sure that nothing happens in AMCON that will embarrass them. We have interactions with the Minister of Justice from time to time. I think that we are extremely exposed to scrutiny from people who will know if something is going wrong. So I don't think there's any single person at AMCON who can be comfortable that they have restructured a transaction not in the process and that it will not be reviewed. And so it's very difficult, but I would say for sure that there's no systematic system of doing deals in AMCON. And I would challenge anybody that talks about it, because this is usual Nigerian talk, to provide evidence of any transaction that they felt was not done up to the highest standards.
AMCON's deals to purchase assets from stockbrokers has been criticized by a few market commentators who describe it as an unnecessary bailout that rewarded bad behavior.
We have to be in danger of creating a moral hazard. The brokers, a lot of them got into trouble because they overtraded, they didn't do what they were supposed to do, and they got themselves in this kind of trouble in conjunction with a lot of the banks. Now, you don't want to create a situation where people are not punished for not doing the right thing. Those brokers who did the right thing and didn't make as much money as some of these brokers did during the boom times, you're not telling them that, look, if we acted like the other brokers, we'd have got a bailout. So they have to address that. So I think that's the central issue. You don't want to create a moral hazard. You want to ensure that people know that if you do the wrong thing, you get punished and your business suffers.
But AMCON CEO Mustapha Chikeobi explains that the deal was legal and done in the best interest of the broader capital market.
Many stockbrokers who ended up with these loans were of the opinion, and it was not very clear. They were of the opinion that all they had to do was put up the equity for the stocks, and that their loss was limited to the equity. And once the stocks fell below the level of the equity, that the banks would sell off the stock and they will walk away. So they were prepared to risk the equity. What happened, in fact, was that after the market kind of seized and the banks were not able to sell fast enough, the values dropped below the equity and into the loans that were given by the banks. So there was real issues about what the liabilities were in the first place. Secondly, we need a vibrant capital market to move forward as an economy. No economy in a capitalist system that we run does well without a vibrant capital market. And this issue was basically weighing down on the capital markets way beyond their value. So we felt it was in the public interest to, in any case, legally, if AMCON is pursuing somebody, AMCON's rights are limited generally to the collateral that the person has. Now, in the case of the stockbrokers, there are 84 of them. We can technically go beyond that and force people into bankruptcy, force people into receiverships. But when you're talking about 84 people and the amounts are not that large, the cost of doing that becomes, in fact, prohibitive. So from our point of view, it made sense to handle that situation and move on for the help of the capital market. But the process is important because AMCON law is very specific about this kind of things. It says that to give forbearance to a class of assets, the AMCON board must approve, send it to the central bank governor for his support, his endorsement, and then that should be forwarded to the Minister of Finance to approve based on public interest. So the only grounds for doing this is that it's in the public interest to do so, and it has to go through the AMCON board, the CBN, and the Ministry of Finance. And so all three parties agreed that this was the right thing to do. The forbearance is probably going to end up being about 15 billion because some stockbrokers did not accept. So when you look at the total forbearance of about 15 billion and look at the stock market that has appreciated in the trillions, it seems that the thinking that we had, that it was good to do this, has been borne out by the market.
Meanwhile, AMCON's plan for the acquired securities could have significant implications for the capital market.
For those that are listed equities, I think the major challenge they may face has to do with the liquidity of the market itself, and it might actually become a flooding factor in the equities market. And when I say equities market now, I mean the secondary equities market. So they've got an option to maybe go through a strategic sale. Of course, AMCON is also looking at possibility of holding those assets and maybe using them as securities, using them in the process of securities lending. Of course, you are aware of the market making activities in the market, which typically, in my own view, for it to pick up as much as what the market expects, there will be need for us to have a securities lending framework. AMCON is looking into that.
We at AMCON don't really like owning assets, contrary to what people think. We would like to sell the assets as quickly as practicable. The problem is that because of the size of AMCON and size of some of these transactions, you will affect the market if you do it in a haphazard manner. So we will, when we find suitable people who can buy our shares in the banks and they come with suitable offers that meet our criteria, then we'll consider it on a case-by-case basis. The notion of going to the stock exchange to sell our shares is probably not what we're thinking about right now. But if somebody comes in, especially if it's foreign direct investment, and they meet our criteria, we will listen.
AMCON holds majority shares in 3 lenders, Keystone, Main Street, and Enterprise Banks, and plans to sell these by 2014. Some commentators say the sale will have consequences for not only the financial markets, but other stakeholders.
So they took over these banks 100%. They spent a lot of money in rebranding and putting the banks in process. So you have a process that was truncated by whomever. You now have a new process. First, people have to trust this new process is not going to end up like the old process. So there's the trust issue. You have to ask yourself, what are you trying to achieve by selling these banks? Is it one, to try and recover the money you spent, the public money you spent on them? If that's the case, then just go to the highest bidder. Are you trying to bring in international investors with more skills to try and broaden the financial base? Then it might not go to the highest bidder, it will go to a more technical, maybe foreign investor who can bring that in. Or 3, are you trying to, with this new banking model, that is basically a universal banking model, are you trying to bring in more regional or smaller banks that are trying to address the real economy like SMEs and stuff? So you're looking for more specialized banking and you're looking for a specialized investor to come in. I think AMCON has to be clear about what they're trying to do in conjunction with CBN. I think that would dictate how they do this. I think it's an opportunity to create some specialist banks, and AMCON is in the power to do that if they do follow the right strategy.
the process is ongoing. And after Enterprise Bank, we'll do, I think it's Main Street next, and then Keystone last. We, again, are guided by the fact that we want to get maximum value. But again, the issue of who is fit and proper to own banks in Nigeria lies with regulators, CBN, and in some measure NDIC, but largely CBN. And so we will pre-qualify people. We will send them to CBN and NDIC, get their views on it, and then we'll take a step at a time. But we were looking to maximize value. We are concerned about issues about staff, and if there are two buyers of the same price range, I think we'll be more inclined to lean towards the person who gives us an assurance that there will not be a wholesale layoff of staff. So it's something we're thinking about, but the process will be very, very transparent, and everybody will know step by step what we're doing, because there's emotion running high about banks in Nigeria, and we want to make sure that nobody feels that the process was not, they didn't have a fair chance and it was not a well-run process.
Coming up, from airlines to prime real estate, we find out what AMCON should or shouldn't do as it unwinds assets worth billions of dollars in what many call a stable but still fragile financial market.